Elon Musk moved closer to his target of owning a quarter of Tesla when he upped his holding from his previous disclosed share of 13.3% in May to slightly over 20%. Musk has drawn criticism for his demands for greater authority, but ARK Invest CEO Cathie Wood is standing with him. She said to us last week that Elon Musk is both our Renaissance man and the greatest inventor of our time. Therefore, I'm constantly shocked by the resistance he encounters, and I do believe that 25% of what he's asking for is voting interest rather than additional economic interest. Furthermore, we support super voting rights for many of our companies because we know the forward-thinking executives. We experience unstable times, therefore they should be able to carry out their plan without interference from boards of directors who are influenced by and listening to stockholders with short-term interests. Investors are left wondering what the ramifications of Musk's audacious decision are given the uncertainty surrounding Tesla's future. Come along as we analyze the most recent advancements, discuss Tesla's future, and discuss what this means for investors like you. In addition, we'll examine some fascinating projections on Tesla's stock price, providing insight into the company's future prospects. However, before we begin, welcome to Tesla Stock News. Like this video and subscribe to our channel if you haven't already. Let's get this video started. Elon Musk increased his interest in Tesla in recent times, bringing his total ownership to little over 20%. This is a big rise from his prior position, which was believed to be 13.3% in May. With this action, he gets one step closer to his goal of owning 25% of the business. Musk is criticized for wanting more power, but ARK Invest CEO Cathie Wood stands by him. Wood hailed Musk last week as the modern-day creator and a Renaissance guy, expressing surprise at the opposition he faces. Wood highlighted the necessity for visionary leaders to navigate volatility without interference from stakeholders with short-term goals by emphasizing Musk's request for increased voting interest rather than financial investments. Steve Wesley, the founder and managing partner of the Wesley Group and a former state controller of California, as well as a board member of Tesla, joins the conversation. In light of Wood's comments, Wesley recognizes Musk's revolutionary influence, especially in light of Tesla's outstanding 2023 performance, which included $97 billion in revenue and market dominance for electric vehicles in the U.S. But Wesley emphasizes how crucial it is to keep appropriate board governance in place, even in the face of Tesla's remarkable expansion. He emphasizes that Tesla must concentrate on maintaining growth, particularly in light of the impending introduction of the $25,000 vehicle, which he views as Musk's next big obstacle. While acknowledging Musk's propensity to balance multiple obligations across his enterprises, Wesley cautions against becoming sidetracked by initiatives such as the present drive for expanded voting rights. He highlights how urgent it is for Tesla to focus only on expanding at a faster rate, offering opportunities like autonomous driving technology, the energy sector, and the worldwide network of charging stations. Wesley emphasizes that pay and assessments ought to be determined by performance. Switching gears, Wesley emphasizes the value of competition and speed to market while avoiding discussing Musk's plans to relocate SpaceX and Tesla. Wesley acknowledges that he no longer owns Tesla shares, despite his confidence for the company's long-term potential. He emphasizes how crucial it is for Tesla to pick up speed on its growth curve, since this affects the company's valuation and the mood of the market. Musk made a passing reference to the prospect of Tesla producing an astounding 20 million cars a year in the future, given the rapidly changing landscape of electric vehicles. Following a report that disclosed Musk's substantial 20.5% ownership stake in Tesla, this revelation reaffirms his position as the company's largest shareholder by a wide margin. Given the recent surge in Tesla's stock price, a significant development is obviously imminent. What does this entail for investors, though? And how does Musk's large ownership position enter the picture? Even with the EV market's optimistic outlook, Tesla nevertheless faces the same difficulties as conventional automakers. Margin pressure and the necessity for product updates are only two of the challenges Tesla must overcome in this shifting market. Yet there are reasons for hope from an investing perspective due to Tesla's inventive edge and the fact that demand is still high. As the price of Tesla's shares has just dropped, astute investors may have a fantastic chance. Although some may find it difficult to value Tesla, the company stands out due to its dual roles as an automaker and a tech pioneer. Musk's substantial ownership position supports his audacious plans for the company and further demonstrates his dedication to Tesla's long-term success. Recent SEC filings indicate that Musk owns a 20.5% stake in Tesla, valued at more than $120 billion. With Musk's strategic vision and this significant ownership, Tesla is well positioned for growth and innovation in the cutthroat EV industry. For the past 6 months, Tesla has lagged behind the Magnificent Seven, its primary rivals. This is partly explained by an audacious approach that puts increasing market share ahead of increasing profitability. Price reductions have been implemented in a number of important US, European, and Chinese markets as part of this plan. Despite these difficulties, Tesla maintains its position as the world's 11th most valuable business, with a market valuation of about $621 billion. With the EV market poised for significant expansion, investors are left wondering about Tesla's long-term prospects. Although Tesla looks to be in a good position to benefit from this expansion, questions are raised about the company's leadership. Elon Musk has been the face of Tesla for a long time, but will he be able to steer the company in the right direction with more control? And would this improve the performance of Tesla's stock? Musk has a sizable ownership share in Tesla, 20.5%, demonstrating his sustained dedication to the business's success. Musk sold Tesla shares in 2022 in order to raise money for his Twitter venture, but it appears from his recent actions that he has been actively buying shares. The increase in optimism surrounding Tesla can be ascribed to Musk's approach to achieving his target 25% stake, which he is using to gain additional control over the company's course. Beyond his attempt at manipulation, many see this as evidence of Musk's steadfast faith in Tesla's future. Legacy manufacturers are facing a tough competition to draw in customers and boost sales in the rapidly changing world of electric vehicles. Several automakers are using aggressive price techniques to attract consumers to move from traditional internal combustion engine vehicles to electric alternatives, as they recognize the growing demand for EVs. Prices for electric vehicles have dropped by more than 10% in the past month alone, indicating that the intensity of this pricing war has reached unprecedented heights. This steep price decline is a reflection of the fiercer competition amongst manufacturers for market share in the quickly growing electric vehicle (EV) sector. Consequently, buyers have access to previously unheard of possibilities to buy EVs at lower price points than ever before. Hyundai has launched an attractive offer for its Ioniq 5 model, making it one such tempting offer. With its stylish look and array of cutting-edge amenities, the Ioniq 5 is positioned as a versatile crossover or hatchback option that will appeal to discriminating consumers. Hyundai's generous cashback incentives and alluring financing packages make the Ioniq 5 an even more alluring choice for those looking for an EV that is both affordable and high quality. In the meantime, Tesla, a leader in the EV industry, has entered the battle with alluring offers on its Model Y. With its cutting-edge technology, performance, and range, the Model Y has drawn interest from EV aficionados all around the world. With competitive pricing and appealing value propositions, Tesla hopes to further establish itself as the industry leader in electric vehicle sales with its strategic pricing strategies. However, in the midst of all the sales and incentives, one can wonder what the ideal price range is to encourage the widespread use of electric cars. According to industry experts, pricing under $30,000 are crucial for expanding the market segment and quickening the shift to electric vehicles. This price range lowers entry barriers and promotes EV adoption across a variety of demographics by making EVs more affordable for a larger group of consumers. Following this pattern, the Kia EV9 stands out as a competitive alternative, providing a 3-row SUV experience at a price point in the mid-$50s. The EV9 meets the needs of families and adventurers alike, appealing to people looking for adaptability and functionality in their purchase of an electric car with its roomy interior, cutting-edge technology and remarkable range. The EV market is expected to experience previously unheard of growth and expansion as automakers keep innovating and improving their products. With options expanding and pricing becoming more competitive, customers have greater flexibility to make decisions that suit their needs and preferences for lifestyle. In the end, finding the sweet spot for EV pricing will allow for widespread adoption and a sustainable future for electric mobility by balancing cost and value. Regarding the future, Musk's audacious plan to double Tesla's manufacturing output to 20 million electric vehicles by 2030 has drawn notice. Analyzing the data shows that Tesla has the potential for enormous growth. Forecasts point to a spike in the company's stock price, fueled primarily by strong sales from its auto division. The potential is even more astounding when you take into account Tesla's energy, artificial intelligence, and supercharger endeavors. Concerns about Tesla's pricing strategy and how it will affect future margins surface as investors assess the company's recent performance. Investors are concerned as a pricing war has broken out as a result of Tesla using a more expansive pricing approach. However, some see the present decline in Tesla shares as a purchasing opportunity despite this uncertainty. In their eyes, Tesla is more than just a car manufacturer. It's an efficiency trailblazer with the potential to lead the next 10 years of automotive innovation. Elon Musk's ambition goes beyond automobiles. It also includes artificial intelligence and Tesla's position as a leader in smart EV technology worldwide. Musk understands the significance of continuing to be at the forefront of AI development in light of the rise of Chinese OEMs as fierce competitors. His complicated relationship with Tesla is characterized by ardor and steadfast commitment. With a 20.5% ownership in Tesla, Musk has substantial sway over the company and can direct it in the direction of his audacious goals. Musk's sizable ownership share is seen favorably by investors. It demonstrates his steadfast dedication to Tesla's achievement and his capacity to instill hope in the company's future. But worries about growing market rivalry for electric vehicles, unstable economic conditions, and Musk's contentious Twitter takeover continue. Notwithstanding these difficulties, Tesla has been resilient in the past, bouncing back from disappointments and retaining its leadership in the EV market. While some are concerned about Musk's volatile personality and the ramifications of his significant ownership position, others acknowledge his brilliance and the revolutionary potential he has for Tesla. It's unclear if Tesla's stock price will reach all-time highs, but investors are advised to keep a careful eye on the company's development. We've covered the whole gamut of Tesla's recent happenings in this video, from Elon Musk's sizable ownership position to the ramifications for investors in the face of a volatile market. As we continue to follow Tesla's path, a few questions remain. Will Musk's audacious plan lead Tesla to unprecedented heights? How will the market for EVs change when competition heats up? And how will Tesla's pricing approach affect the company's earnings and stock price movement? Please feel free to add your ideas and observations in the space provided below. How do you feel about Tesla, and is this a tipping moment in the company's stock price? Together, let's carry on this conversation. Remember to like and subscribe to Tesla Stock News to receive updates on Tesla and the most recent information about the electric vehicle industry. We appreciate you watching this film with us, and we hope to see you again.